Welcome to TradeTheMBI.com. This is John. This report is for the 2nd of February, and, well, the color speaks for itself. I mean, we knew where this was headed, and my expectation was to pull us right back down to ABM green, given the DOC spread with the short signal, and as we talked about it the other day, the drop-off. And once you get the yellow here below that 13, well, it's a 15 number here, you get more of a breakdown. That's all. We had the short-term buyers lifting it a little bit to help keep things from completely collapsing, but you're breaking below zones, getting below the zero now for long-term buyers. Mid-term buyers already below the -7, so they're heading towards oversold pretty quick. So maybe it won't be that long a correction. You got a couple of key points. So you had a restart of algorithmic behavior right about here, which we've just reached. The second one was all the way back here at 27. That would be a much more significant pullback, but long overdue. So here's what it looks like on the NQ, getting right to that exact same location off the exact same style reading. A little bit weaker when you look at it from the steel standpoint. And of course, that's popping the euro to record high level. Nothing in particular. The EU is still a nightmare and a disaster. But in this particular case, when you pull the levers of the Fed, squeezing them, you get this kind of situation. And there really isn't significant growth for inflation or anything in Europe justifying the move, other than perceived equilibrium, that there's going to be some benefit out of being in Europe. But the reality is it helps the U.S., and that should mitigate huge drop-offs. Here, now we're starting to get a realization thing coming in. See, and this was a slow thing that I noticed coming back from last November. It was what appeared to be a reduction in government involvement in propping things, and it started to continue through January, and I think now we're into almost a complete return back to market practices. Amazing how you get a new Fed chairman and some things change, and all of a sudden free market's starting to come back. Go figure. Oil back up to the peaks, not a surprise there, as it came right to the 15, turns around, pops back up, complete reset there, but it never had a drop-off here, at least a significant one for long-term, mid-term buyers. So there's just plenty of interest. That is the inflation card for the future. Now you've had several months of it, and that is going to start percolating its way through, which you also had the job numbers, which means at a certain point people are going to be thinking tight labor market. Of course, they've been very confused about the labor market, not understanding that you had this massive pool of people who just weren't working. So, talk to you about short-term, mid-term charts and how to utilize the lovely steel, and that we had no resets on this, that even though you ended up with your short little bounces, all you could expect those to do was a return to your 50%, most likely. If it went slightly above, you'd be able to see, because then the cyan would move below red, and you'd have a secondary go at it that way. So we had the short all the way back up here from, the 11,000 plus range, just under 11.5. Here you're down to 78.80. Sure, there's a lot of news, but you don't think there were people that knew that news ahead of time? You're just getting to that news? Fine. But we're here to tap into the people who know it ahead of time, and they're showing what they're doing. And you can choose to ignore it, or you can choose to accept it and go with it. I mean, these are the plain and simple choices. Once we get into the plateau area, no reset. You almost had an attempt as we got past the 50% right here, where the cyan dipped just a fraction of a moment, and then it flipped right back and carried across. I mean, if you zoom in, see, this is where, it's always difficult because I don't want to prejudge for someone what time frame they want to roll things on. I mean, from the grand short of where this was, for me, a return back to this level isn't going to cause me to want to cover that, but nothing wrong with someone who's actively playing, taking the small signal and looking for a move back up to the 50% a little bit more. It just depends on how active you are. So these are the relative motions of what kind of trader you want to be. But again, the breakdown starting DOC spreads that develop along this plateau up at the 76% fib line there and cascade. So it's pretty clear in my mind, but that's why I put the charts out so that you can see. So that's what I did from the intraday chart here. You can always go back and look at it. I posted it on the Skype chat. Shrink that a little bit more. I put in what would be the short signals as they came through, the DOC spreads with the orange going above, not a complete reset from the steel on that point. And then see, it crosses over, but you're having straight decay of your midterm, long-term buyers. So there's not enough to hold them. I mean, it held, 3 or 4 bars, and then, continuation right down, and then you didn't get a reset until back over here. Fine, you make it back over the 23%. I'm expecting a 50% at that point. Sort of stalls, goes sideways, which would still leave me long because I'm not getting anything that's retracing me below my 23% stop or my entry point. You had a little dip here, but it gave you another signal, so even if you wanted to take it, you'd still be right back at pretty close to the same spot. And then shakeout goes positive, you move back up to the highs. This is that declining high with a flat low causes price to want to move towards the high. Well, sure enough, that's what it did. Of course, you get there, you get a DOC spread, cyan. Now, you're slightly above. You could have even waited one more bar. I just particularly, when I see this warning sign of the orange going above and then the green dipping below the red, I'm more willing to take my gains at that particular point if I'm not making new highs. Now, in this particular case, it was making new highs. So once it started to plateau and then you break the ABM yellow, it's like, okay, now this is going to go back down. And then boom. And then, so these are the quick little ups and downs, 4 or 5 points at a shot. And that's the way it works. You end up with another nice little series here, but again, no reset of the steel coming down. Now, when you get these moves that go above plus 13.5, effectively that's it coming below, but they're immediately dipping back down below. Now, if they stayed up there, then you'd have a much more sustained run, but when you know that they don't have that sustained power because they haven't reset, a reset would have been this popping, the steel popping above the 13.5 and then going straight back down for a reset. And this is not what happened, but it's actually more or less what happened right here. You had the reset, they triggered again. The only problem was they triggered and they had no support from their other friends, and that caused it to fade. So I hope that gives you a clearer idea. I'll continue to post those. You're looking at a pretty significant pullback so far, 17, almost 0.5%. The cryptocurrency thing, this was something that we could see was taking place. The inverse gold trade and everything was just so clean and precise, as well as how once the futures started for the cryptocurrencies, then it became an easy game because we're able to see it all. So it becomes very clear at that particular point. Anyway, that's the long and the short of it. As always, though, trade well. And if you have any questions, put them on the Skype chat. We'll go from there. Trade well.